morning, ladies and gentlemen. A very warm welcome to you on Business Today Television. I am your host Shailendra Bhatnagar, joining you from New Delhi. मंगलवार है तो मंगल ही होगा और बहुत ही शानदार तरीके से आपको निफ्टी, बैंक निफ्टी और सेंसेक्स दुनिया के सबसे बेहतरीन इंडेक्स बनते हुए दिख रहे हैं एक महीने के दायरे में। छठी दिन लगातार तेजी, 107 अंक ऊपर सेंसेक्स, 107 अंक ऊपर निफ्टी, 24,237। इस महीने आपने इंडेक्स को लगभग आप समझिए अब 4% ऊपर ट्रेड करते हुए देखा है। बैंक निफ्टी रिकॉर्ड हाई पर आज भी 1.1% ऊपर। पिछले इस अप्रैल की महीने की एक्सपायरी में बैंक निफ्टी लगभग 10-11% ऊपर बढ़ चुका है। बहुत ही ज़बरदस्त मोमेंटम बाज़ार में। अगर आप ओवरऑल एडवांस डिक्लाइन रेशियोज देखें तो लगभग आप समझिए 1950 शेयर्स हरे निशान में है, 500 शेयर लाल निशान में है, तो ओवरऑल 4:1 का एडवांस डिक्लाइन रेशियो है। 19 में से 18 इंडेक्स हरे निशान में ट्रेड कर रहे हैं। सबसे ज़्यादा तेज़ी निफ्टी पीएसयू बैंकिंग इंडेक्स में, निफ्टी रियल्टी इंडेक्स 2% ऊपर है। अल्फा 50 मिड कैप सेलेक्ट एफएमसीजी इंडिसेस में आपको लगभग 1% की तेज़ी दिख रही है। और साथ ही साथ गोल्ड प्राइसेस फिर एक उच्चतम लेवल पर जाते हुए लगभग 1 लाख की तरफ अग्रसर। और यहाँ पर कम से कम गोल्ड के लिए आपको बहुत ही सावधानी बरतनी चाहिए। लॉन्ग साइड में सिर्फ और सिर्फ स्पेकुलेटिंग बाइंग आपको होती हुई दिख रही है, डिलीवरी बाइंग बहुत ही कम। और ये एक चिंता का विषय है उन लोगों के लिए जो लॉन्ग साइड पर हैं फ्यूचर्स के मार्केट्स में। जॉइनिंग अस नाउ इज मिस्टर शरद अवस्थी, हेड ऑफ रिसर्च एट SMIFS Securities for the Private Client Group. Namaste Sharad ji, as always, a very warm welcome to you, sir. How do you see sentiment on Dalal Street? Are we in the right direction or is enough enough? Rally is now 6 days old.
Namaskar. No, I think we have seen around 6-7 months of underperformance vis-a-vis global markets. And as we have been speaking earlier, also that out of all this tariff situation, most probably India comes out winners and on top. And the valuation discomfort that was there with India around 6 months back now does not exist, partly because China has come up and India has corrected both ways. So I don't think there are many reasons for you to be very negative on India. Most probably FII flows are also turning their tide, and that could be a very good tailwind for Indian markets. Domestic flows would continue to be strong only, so we don't see any problem there. And the quarterly numbers, particularly the banks, etc., are reporting good numbers. And I'm expecting this time maybe a Q1 could be an aberration also for most banking stocks, particularly with tailwind from the treasury side, part of it played out in Q4. Part of it, the treasury gains would play out in Q1. Add to that, probably a boost from retail lending that grows. So I think all in all, we are looking at positive quarterly numbers. And in the short term, maybe gyrations due to various news flows, etc. But long term, I think it will align to what the bottom line numbers are saying from companies, and that should show some improvement even in Q1. Q4 certainly if it is going to be better. Q1 could also show some improvement. So we are not very nervous. Even the interest rate trajectory is lower, inflation's under control. So I think largely global and domestic triggers seem to be saying that most probably we are in a sweet spot for some time to come.
Yes. Right. Sharad ji, are you a little worried about the parabolic move that is coming into gold prices? They were just 88,000 rupees a tola, now 98,000 rupees a tola in less than 5-6 trading sessions. And this is just the 5-day gain. It's up 22, 23, 33% on a 1-year basis. Is gold overextended?
I means it's hard to value gold really. I mean, you don't have any parameters to really value gold as if it is expensive or not. You can do it with a lot of cross
Yes.
commodity connections, etc. But actually, there is no valuation metrics. It's just the demand supply situation. Right now, I think globally the larger players are a bit unsure about how the global economy would play out, and that has played in favor of gold. Then there is a lot of momentum chasing that happens internationally, and commodities are more speculative markets. So I think more speculation there. So till now, it doesn't seem to suggest that gold is stopping anytime soon. But yeah, I'm not a gold fanatic, and I don't think it adds any value to your portfolio. I only use it to hedge occasionally. And at these prices, after this kind of run up, though I say it around 10,000-15,000 rupees lower also, that maybe it's fairly to fully valued, it's better to be in equities. But even now, I think at these prices, it's not very favorable to be in gold. May continue to rise higher, but it is largely because of the speculative interest, and some part of it may be because of the uncertainty globally. But at these prices, to take a bet on gold, I think it's logically it doesn't seem like a good option, because I think equities are in a sweet spot, particularly Indian equities. So I don't think it is sensible to get into gold from here on. I think equities could deliver you much better returns.
Yes, I think that's a very sage and practical advice. It would be really very difficult to justify any kind of entry level at current prices. Gold, for record, is up 32% since 31st of December in the year-to-date format. That means in the last 4 months, gold prices have appreciated to 1 lakh rupees a tola, nearly that. If you add the GST, yes, it is. And in a 1 year period, it's up 50%. So that's the rally, ladies and gentlemen, that we've seen in gold, and time to be cautious. Sharadji, I'm sure the analyst community is applauding the record highs that you are seeing in HDFC Bank, ICICI Bank, Kotak to some extent, and Bajaj Finance. How do you see the uh, the trend as far as NBFCs and private banks are concerned? Are they looking overheated, or is the rally justified even now?
I would not say, sir, it's across the board overheated. NBFCs certainly are not overheated. They had corrected substantially. And I think the liquidity reversal that has happened in more for NBFCs is going to be very positive. Even today, we have an LCR relaxation. So I think it will be very positive that liquidity comes back into the system, and NBFCs will, I think, gain the most out of it. And the second part that would aid is basically the MSME microfinance system, usually strain that we have seen in that business in terms of rising NPAs, etc. I think that has also peaked out from here on. That should also show some improvement. So for NBFCs, I think it's going to be a much better time going ahead. The likes of a Poonawalla, L&T Finance, they could do very well. They have some retail focus. Poonawalla is also guiding for aggressive expansions, has corrected a bit from the highs, so that could help them. Among the gold loan companies, Amannapuram looks like a good bet at these valuations. The valuation comfort vis-a-vis Muthoot is substantial. Similarly, I think for banks, for banks, the private sector banks, I mean, maybe Kotak has more or less reached its target prices, maybe another 150, 200 rupees. But in case they can show some improvement on the numbers, I think we are still a bit away from the peak price to book multiples the bank can get. For HDFC, we are working with targets of around 2100, 2150. ICICI Bank, maybe fairly to fully valued at these prices. So I think within the private sector banks, I would be happy betting on an Axis Bank to some extent, maybe HDFC Bank for 2100, 2150. But I think the PSU bank space now looks very attractive in terms of the valuations at which they are trading, the likes of SBI, PNB, Canara Bank, BOB, even the smaller ones, they look very attractive. And most NBFC small finance banks have been advocating them for quite some time, but they corrected substantially. So I think those are stories that could do very well, particularly the NBFC part could do very well from here. But Bajaj Finance again on the expensive side, but I think the budget cards and how it translates into consumer durable demand and how much of it is financed, that could be one place you could look at. So maybe there could be some upward revisions for Bajaj Finance. We'll need to see Q1 onwards how it translates. But then Bajaj Finance, Sundaram, and Chola, they are a bit on the expensive side. So I would prefer not to be in them, but to be in stocks that could have a price to book multiple re-rating as well. So the likes of Poonawalla and M&M Finance, even L&T Finance, this could be good bets that could see a substantial revision there.
Okay, so basically, second rank quality NBFCs should now start getting traction, given that we have a record high on at least Chola and Bajaj Finance, and perhaps Shriram is also headed that way. Sharadji, where are you hunting on behalf of your private clients? What are the spaces that you have invested in the last 10 odd sessions?
Uh, we bought a bit into defense stories like HAL, BDL. I think maybe after this correction, they provide you good long-term opportunities or entry points. Uh, Similarly, we bought a bit into Castrol. I think that's a good story to look at. Grasim, we have looked at. Adit Birla Capital looks like a good story at these prices. Grasim obviously is an interplay amongst the various group companies also. So where I think Adit Birla Capital could play a good role, it could be a very strong re-rating candidate. Similarly, I think even Poonawalla, as I was just mentioning, that could be a good bet you could look at. Coal India has some announcements today also. I think at these valuations, it's a decent bet. You have a decent dividend yield. And I think it's more or less a domestic story, not much to do with tariffs, etc. So I think even a Coal India could be a good bet at current valuations. OMCs, IOC is something we have been looking at. And particularly the gas counters, I think the type of retracement they have seen from the highs, particularly IGL and MGL. I think IGL and MGL could be very good bets. The valuations are very comfortable, 10, 11 times. And with some gas price reformatting, this, that, I think they could do very well. Internally, IGL is also working on reformatting its business. So I think these are the few ideas that we have been looking at.
Is the pain enough, or is more declines in the offing in the near future?
In which sector, sir?
Sir, IT software, sir.
No, I think largely most of the pain is behind us. If you look at the valuations across the board, most of them are trading at per 2022 times. Even the frontline ones, maybe a Coforge persistent trade a bit higher. But rest of the pack, I think it's a bit overdone. The fear of a US recession is overblown. And particularly what I understand is if industry grows and if, lending rates start to come down, even BFSI would grow in the first phase and the second phase industry would grow. So IT demand would be there. I think AI is a major overhang that people are very concerned about how it plays on the Indian IT companies. But as I've been saying earlier, also they have extended their horizon into the expensive consultancy kind of business, which gets you more traditional business. So I think the Indian companies know that simply running sweatshops is not going to help them from here on. Most of them are transforming. Some of them, the larger ones, have already transformed into a consulting model. So I think that should play out. AI is something that's very interesting, but I think it's a decade away still to make any major impact. Some initial effect on the programming kind of works, etc., will have its effect on the IT companies. But I think over the last 1.5 years, if you look at the speed or pace of transition that these companies have had, you can clearly understand that they are also forcing this problem that running sweatshops will not help. So I think they are graduating to a higher level on more on the consulting side. That's a higher margin, long gestation business. But the conversions result in very good downline businesses also. So I think they have transitioned. The market is not factoring in over the next 2-3 quarters, particularly over the next quarter or so as the US uncertainty dies down. I think you will have more clarity. The forward commentaries will be much more clearer. And then probably you have a very good space from here for these companies to rally upwards. So I think this is a very good time to hunt, count means make positions on the IT stocks. I think it's a very good contra bet to have on your portfolio at this point in time.
Okay. And where in the domestic space are you focused? Where you think that the impact of tariffs, which are being fought over globally, have the least impact? You've talked about defense, you've talked about NBFCs, and of course, private banks. Where else do you see the impact of tariffs being the least?
I think generally, sir, to isolate something on tariffs would be very difficult. We live in an intertwined world. But if you want to put a finger, I think, as I mentioned, Coal India could be one bet. It's largely domestic in nature. The cement industry is something which is very domestic in nature, not much to do anywhere else. The likes of Dalmia Bharat, ACC could be your best bets to look at. Similarly, I think some of the FMCG companies could be good bet. Though across the board, I would not say that valuations are very attractive, but maybe an Imami could be a good bet, for 100, 150 rupee kind of upside, even if it trades at, 30 times next year earnings. And lower oil prices also benefit them in terms of lower raw material cost. So I think Imami may be a good bet. You could start looking at Dabur as a good bet from here on, but it has international exposure. But I think these are good ideas to look at on a more domestic side. ITC at these valuations looks like a decent bet to bet on the domestic side. But as an industry, I think, yeah, certainly, Coal India could be a good bet. Cement could be a very domestic oriented thing. So cement you could look at. The two-wheelers, both companies have some export option. Bajaj has some larger export options, but it's not much to US. So I think even the two-wheeler industry is mostly domestic in nature. So you could even look at that, particularly Bajaj and Hero MotoCorp.
What is your view on sectors such as pharma? Is there a domestic oriented pharma stock that you find attractive at current levels, or is pharma out of the window?
No, but we don't throw sectors out of the window. I think within sectors, you always have opportunities. Within pharma, I think I would not be with the gung ho names like the DVs or the Lauruses of the world. But Dr. Reddy does certainly look attractive at these valuations. I think they are talking about ramping up the India business, which could result in much better margins. The US exposure is there. Some new drugs are there on the anvil, so they could benefit out of that. Similarly, a Biocon could be a very good bet on the biosimilar biotech kind of stuff. So I think the number of products that they have a first mover advantage. The international acquisition, how it pans out, how they stabilize it, that could also further add wings to the numbers. So I think these are two, three ideas. One story which I like, which has gone down substantially after the IPO, is Acum's drug. I think it looked very promising when we looked at it during the IPO, but it has corrected substantially since. So I think that could be a good idea you could look at.
Okay. Outcomes is something that we'll, of course, focus upon a little later. Sharadji, when you look at the PSU pack, you've made your preference known about public sector banks, but many of erstwhile favorites like HUDCO, IREDA, to some extent, all of defense, has risen very sharply since mid-March to now almost end of April. Within the PSU pack, minus defense and minus PSU banks, anything that catches your attention apart from Coal India?
Uh, yeah, I think rights could be one idea you could look at. I think largely an engineering company, but the
Right.
valuations are what 18, 20 times. I think so. It looks like a decent number, that a decent company that you could look at. Similarly, bail could be a good idea, as corrected substantially from the higher levels. I think next year earnings are expected to be what 7, 8 rupees, substantial upgrade from the current year's earning. So I think bail and rights could be two ideas, largely from the engineering space and railway space. But I think these are good ideas you could look at from current valuations on the PSU basket. Within REC PFC, you could still look at PFC. I think that's a good long-term bet. But if I have to choose one or two, I think rights and bail rightly suit into the list, barring the OMCs and the banks on the PSU side.
Okay, fair point. And what is just not looking attractive even at current levels? Maybe because the correction hasn't deepened enough, or God forbid those stocks are now up again. Anything you find overvalued which has become worse or has not responded?
I don't think across the board you could look at something that's become overvalued because everything's corrected over the last 5, 6 months. But yeah, the likes of a trend I might not look at still at these valuations. As I mentioned, I would be more comfortable buying an Aditya Birla Capital if I have to play the branding story and the retail part of it. Aditya Birla Finance Retail, sorry. And similarly, I think some of the frontline FMCG names, they might not be very attractive even at these valuations, the likes of, say, HUL, Nestle, etc. So I think there the valuations are not attractive still, and I would want to stay away from them. Similarly, what else? I think some of the hospital or the healthcare plays, they trade at exorbitant valuations, not leaving much scope.
Yes, correct.
Maybe an Asian Paints doesn't look that Asian. This thing, Apollo Hospital doesn't look that stretched, but rest of it does look a bit stretched. So I think some of the healthcare names, barring probably a Narayana Hurdayalaya, I would not want to look at. Barring that, what else? I think across the board, I don't think maybe an M&M, Maruti, my M&M particularly looks fully valued at these prices. But other than that, I think across the board, even the likes of Titan, etc., which have been darlings of the market for quite some time, they've corrected substantially, maybe trading at much lower valuations vis-a-vis what they were doing. Might not have much of a broad trigger going forward, but I think at these valuations, you would not see much of selling in these counters. Maybe it's not advisable to buy also. Some of the broking or the wealth management firms, I think they continue to still trade at exorbitant valuations. Barring rights, most of the railway stocks, you mentioned IREDA earlier. I think I've never been comfortable about IREDA valuations. I'm not comfortable even today. So there are names, means there are pockets, not across the board, but now generally it's a very small pocket. Some of the EMS companies, I mean, even today Dixon is up because of a big announcement. But these companies, the type of opportunities that are coming up to them over a period of time are substantially large. And if they convert it, I think that would be very big game changers for them. But the market is, I think, valuing them a bit too much ahead of time. So maybe some stocks in the EMS space, though I'm very positive on IKEO, I think that's a good story to bet on. But the likes of a Dixon, Umber, I think maybe they are fully to fairly valued or a bit stretched in terms of valuation at these prices. For that matter, even a DVs could be a bit stretched.
Okay, so some hospitals, some parts of railway, and of course, some parts of EMS space still looked stretched to Sharaji. Your view, Mr. Avasthi, on the rupee? Uh, has it done fairly well given the recent strength that we are seeing? And based on that, you have the FIIs sort of still remaining net negative sellers when dollar index is at now a 3-year low. The last time we saw the dollar index at this level was February 2022. Would you guess what is going in the minds of FIIs?
I think largely once you have uncertainty internationally, people don't want to bet on emerging or developing markets. So I think that would be one key thing that would be on their minds. But right now, after a long sustained depreciation of the USD INR, I think finally we have a situation where probably the INR is going to appreciate. We have been talking about the bond inflows, etc. But yeah, in the medium term, there has been some weakness. But from here on, it looks like the rupee probably could be on a sustained path where it appreciates vis-a-vis the dollar. And even Trump has a softer manifesto where he wants to have a weaker dollar. How easy or hard it will be for him, considering the debt leverage, etc. That's something that we need to see. But yeah, his manifesto had that as well. So I think gradually the rupee should appreciate. Last 1.5 year, we have seen what 4-5 rupee kind of depreciation happening. Part of it has retraced. So I think the rupee should largely be stronger. And I think once internationally there is a bit of calm and certainty regarding how the US tariff and particularly the India relation with respect to US tariff plays out, though internationally what happens with China might have a percolating effect across the world. But I think largely we have more certainty about what is happening and what is not happening regarding tariffs. From there on, you would see much better or sustained FII inflows also. And that should also support the INR appreciation vis-a-vis the USD.
And my final question to you is on two-wheeler stocks. Sharadji, have we cooled down enough on Bajaj Auto, Hero Motors, and TVS Motors as far as prices are concerned of their stocks? iShare, as you know, is at a record high.
So TVS hasn't cooled much also. So I think TVS valuation wise, it's very hard to justify at these prices, particularly the electric scooter where they had a first mover advantage in terms of being the larger player. I think Bajaj Auto and Hero Moto are catching up on that space. Recently, we have heard that Vita prices have also been brought down to bring some parity. So I think at these valuations, I'd be more comfortable buying into a Bajaj Auto and Hero MotoCorp. I share TVS. They look fairly to fully valued at these prices, and I think the competition from Bajaj and Hero for particularly for TVS, I think that could result in some slowdown on the EV side for them. And iShares, I think it's fairly fully valued, but once the market gets into a risk on kind of zone where you give hefty valuations to the premium side of the business. But there also, I think Hero has made a dent with the Harley, connect Harley JV, etc. So I think all in all, it's a mixed bag. So I would be very happy buying into a Hero Moto and Bajaj Auto at these prices. But iShares and TVS, I think I would still continue to avoid.
Okay. With that, ladies and gentlemen, we'll call it a session here. Thank you, Sharad ji, for your time. And of course, we'll remember the very sage and practical advice that you gave on markets. PSU banks look good. Gold looks overstretched. Parts of the market, especially in the EMS space, are also overstretched. Sharad ji has bought into some defense stocks over the last 10 days or so, and finds value in second rung NBFCs like Poonawalla Finance, M&M Finance, and of course has a liking for Ekam Drugs. Thank you so much for your time, and we hope to chat with you fairly soon. Mr. Sharad Avasthi, Head of Research for the Private Client Group at SMIFS Securities. Please continue watching Business Today Television. There's a lot that's happening on the other side of the break. Have a nice day.